Welcome traders. In today's TEFS education video, I'm just going to talk about the how to trade, how not to trade the open in the stock exchange indeed. My name is Agnes Laffer. I am the performance coach, trader performance coach by the TEFS proprietary trading company, and we do provide fantastic services like funded accounts, challenges, and if you are going to choose a higher funded account, you can have a chance to have private mentoring with me, have access to VIP trading room, and in the TEFS YouTube trading room, which I strongly suggest to join and check. The link is in the bio. Actually, we have a fantastic trading community there. I'm leading trading rooms for more than a decade, and I'm more than happy to welcome you there as well. But let's just get back to today's slides and today's subject. As I mentioned you, I am mentoring traders for more than 10, 12 years, a lot indeed. And I had, I think, more than 100, 120 mentor traders all over the world. And one thing, it was quite common in every trader, everyone, including me, try to trade the open. Like, I'm not meaning about the open that you are waiting 5 minutes after the opening bell at 9:30 market time, Eastern time, and then you just start, getting the vibe, how the market is feeling today, what is the market mood, what is the market movers, and then you just go for a trade. No, I mean the very much opening bell trade when your hand is just on the button, your finger is just on the button, and you just must click on it. Well, this is I'm talking about, as you can see, how to trade that chaos in the beginning of the day, because that's, guys, not easy at all. Well, what is the problem with the first 10-15 minutes of trading? Mostly, as you can see on the slide, 80-90% of the retail traders' losses happen very early indeed. Massive volatility is going through. Why? Because we have a lot of automated orders, which most of them, they are going to get executed at the time of the opening, which means it's going to cause a huge emotional chaos. Maybe during the pre-market or after-market, we just got some huge news, like now in this year 2025, of course, about the tariffs. What else? No clear trend, just noise and traps. So a sharp mind cuts through this chaos indeed, which again, it's not easy because you're not sitting there just to wait patiently and stare at the charts, right? No, you're sitting there because of that, actually. I know it can be boring, but it's much better really to get a little, let's call it like a hint about the market behavior for today. Always make the pre-market to make it for an opportunity to get ready for the trading day. Most of the traders are not doing that. They are skipping the preparation. By the way, in the TEFS YouTube trading room, I'm starting every day 9 a.m. sharp, like 30 minutes before the market opens, and we are going to go through all of the important news, what happened on the market regarding the company news and so on. So it's very much important, I think, to focus on that part as well. But let's see what else is a problem when we are talking in the, I would emphasize especially the first 5 minutes trades. Also, I have lots of traders. If you are going to join the YouTube trading room, you will see one trader. He always starts with like, Agi, I'm just going to sit on my hands for the first 15 minutes. And because this is his strategy, he's trading for really long years. He just went through this, which I was in that situation as well, when I just jumped into the trading in the first minute, and I lost a lot indeed. So because of that, he already noticed that there are common psychological traps, as you can see on the slide as well. For example, FOMO. I think you are familiar with the FOMO, fear of missing out. When you see, for example, today is July 11th, I think, 2025, and yesterday AMD, it just got a great news, and it started with a huge gap up indeed. And instead of really continuing straight higher like crazy, it was a little bit stopped, and we don't know what's going to happen. We did not know what's going to happen, so we just left it. So traders, these are the type of of stocks which are starting with a gap up or a gap down, but rather the gap up, it's getting the fear of missing out. It has a very let's call it specific psychological reason for that. I'm not going to go into this indeed, but especially by the longs, by the gap ups, this FOMO can be triggered very hardly indeed. You see it's just going up and you can just actually jump on the buy button and you immediately buy this stock, which in the second minute is just going to make a huge red candle and you are panicking and you are out with a quite of an ugly loss to start the day with, and it's not worse actually than to start the day in red so quickly indeed. Our confidence from the pre-market prep. So this is another group who is doing the pre-market preparation, but based on his or her strategy, and I would say not even a strategy, but observation, let's call it like that, analysis, he's sure it's going to go up. And unfortunately, as I've told you, because of a lot of automated orders, market makers are there as well. I'm just going to talk about it later. And a lot of chaos, which is just happening in the first 5 minutes. Nothing is guaranteed, guys. You do not have an historical chart yet, just the pre-market chart, which I must tell you, it can be very useful. But for the first 1 minute trade, I would say the odds are not the best most of the time. Chasing the green candles, it's just the FOMO, indeed, fear of missing out, and the revenge trading. Yeah, this can be when, for example, yesterday you lost on that stock. For example, you get long Tesla went down, and today is just opening with a big gap up, and you say that, you see, this is what I was talking about yesterday. Let's just get in. So this is a kind of a revenge trade, which is not the best advisor, as we know. So, and another very important mistake what my traders done in the past as well, when they started the mentoring program with me, and I was in your shoes as well, guys. The breakout must go higher. This is mostly a common trap. Yes, we have really great strategies like the open range break strategy, if you are familiar with, or for example, before 2020, I had a very good strategy, which was like taking a daily high breakout after consolidation, after the opening bell, after the first 5 minutes. It's strictly, but it's not working anymore. Traders, I guess you have noticed as well that especially since 2020, but the start of 2025, things changed rapidly. There is more chaos, not that many predictable moves as before, and it's very much valid for the opening as well. So that's why I strongly advise you not to start trading in the first 10 seconds or the first 5 minutes. Wait at least 5-10 minutes. I would say better, of course, 15, but sometimes I do find some great gap and goes, for example, after the first 5 minutes. So in my strategies, the first 5 minutes, it's a big no. Okay, so I'm not touching anything, doesn't matter what. After the first 5 minutes, if I have the gap and go strategy and the setup, it's valid, I'm trying with a half share size. Okay, I'm trading with a half share size, and there are adding points through my trading or through the trade indeed. But in the first minute, no way. Okay, next slide. Let's just see that. Market movers or makers or movers, these are the makers who are making the moves. So market makers love the open, guys, and don't let them to chase your stops and chase you up, actually, because this is what they are living from. Okay, don't be there. Let's just outsmart the market makers. We don't need this big chaos what they are causing most of the times. Like the highest liquidity, which is the opening, can be the best trap environment, as we were just talking about. Fake breakouts to induce FOMO, stop runs, shake out both longs and shorts. This can be painful, as we were talking about. So let's just emphasize a little bit or summarize what not to do. Do not enter in the first minute breakout. Blind trades. What does a blind trade mean? I would say it's almost equal with the emotion-based decision as well, because you are just going to enter into a trade because it looks so strong, so good, such a huge gap up. it's definitely going to be continued. And then comes the big surprise, the unpleasant surprise most of the times, that is just pulling back really, really strongly. And scaling in without a plan, this last three actually, or even the first, is just going hand in hand, because one is just giving a little bit more to the other to convince you to get into the trade. So don't be the one others profit from. Wait, watch, and trade smart. And if you're going to join to the TEFS YouTube trading room, you're more than welcome. As I've told you guys, link in the bio. I'm going to be there and help you as my traders there. They can just ask me anytime, Agi, what do you think? And so on. And of course, I'm going to share my thoughts as well. Psychology of patience. Well, the open is a chaos. That's why we need to wait. Let others show their bias. It's very important, guys, because not even others, I would say, I'm always calling as the market mood. Because we have seen, like, I do remember that did happen last year, 2024, I think in the fall, in autumn, when we got a very good CPI number. You know, CPI, it's always get released before the market open. And the market started with a huge gap up. But it was already priced in the pre-market. And everyone thought it's going to go higher. And suddenly, it started to go down, and it has not stopped until it did fill the gap. So this was a huge carnage for the longs who just entered in the first minute to the long position, and they've been waiting for the reversal that, oh, the CPI was good, so it's going to go up. No, you've never seen that level. Really, not on that day. For months after that, it started a pullback. Be careful, guys. Okay, so discipline is a position, because be a sniper and not a machine gun. Indeed, it's much better. So just wait patiently. As one of my very much beloved mentor, he just told me once that, Agi, don't get to this FOMO trap. Never. You know why? Because especially by stock day trading, guys, there are so many stocks, so many opportunities, that the other opportunity is just around the corner. It's just waiting for you. You do not need to hurry up, okay? You will get these 3-5 trades in a day, which is going to make your day. Just be patient. Tools to stay disciplined, which is not easy, but for example, you can use a timer of your phone for 5 minutes, 10 minutes, whatever. As I've told you, my trader in the room, he's not trading for the first 15 minutes. And if you hear the beep, you can just let your hands to go to the mouse and the button, but without that, definitely not. Journal every open trade, because a lot of my mentor traders in the past, they improved dramatically when we just made together this, I call them trade reviews. You need to journal. That's a must. Every day trader knows this. If you have not known this fact yet, then please just do it. Journal your trades. So back then, when we were just going through the trades, and I'm seeing that he was losing every day in the first, not every day, but I would say 70% of the days when he was trading the first 10 minutes. And I told him that, listen, I can improve your trading from one day to another. Stop trading the first 10 minutes. And surprise, he did improve. So that was a good one. So yeah, check your trades. Do a test. If it's not going, if it's not profitable for you, leave it alone. Watch volume, not just the price. I just made a fantastic video about that as well. It is about liquidity zones. You can just find it on our channel. You are more than welcome to watch it, because volume, it's a very much forgotten secret indicator, which I'm using by trading as well. So traders, never forget to watch the bigger picture, the volume, the daily levels as well, and not decide just for this one tiny, even it's not a tiny but a huge green candle. Do not decide on that only, because you can just burn yourself in the beginning of the day, and it's not good for your psychology, not good for your improvement as a trader, because we know exactly how devastating it can be when you are starting with a red trade. Okay, so let's just avoid it. If it needs a little bit more patience, just go for it. So traders, that was it for today, which I wanted to share with you. I hope I could help you. You liked the video, and thank you for watching, definitely. So please be remembered, don't read the chaos, just read the structure, and patience beats the impulse. If you like the video, please just subscribe and get for a like button for us. And don't forget, don't trade alone. You don't have to, because the TEFS has a free YouTube trading room. I'm leading the trading room every day starting 9 a.m. sharp. It's the link is in the bio. And please just go to the TEFS.com and search through our funded accounts challenges. And through that, I'm going to see you on one of our private mentoring occasion. So traders, I wish you a beautiful green day as always. Thank you for watching. See you in the next video. Bye.